Righty ho, everyone. I think we are actually live. I'm getting a few mixed signals on the control panel here. Welcome and thanks for joining me for Trading Buddies on this Monday, the whatever it is, 22nd of April. It's great to have your company. Nice to see some fresh faces in the room. The rules here are simple. There are none. You can ask any question you want. You can come on camera. You can do anything that you please. Well, within boundaries, you've got to keep it nice and clean. It is a family show, but it's all about you guys. It's all about sharing what we think, sharing what we think may happen throughout the week. Ash will be joining me shortly to do exactly that. I'll be giving you some ideas and hopefully you've got some as well. At the moment, we attempt to trade the breakout of gold in the London Open. So let's go and do that, shall we? I'll update trades that I was in before we do that. Firstly, the bad news, Euro Aussie. We went short Euro Aussie under this bar here some time ago. I think it was this bar here. Can't quite remember now. But our trailing stop, we tightened up our stop from here somewhere to about here, I believe. And that has been hit. Wars had a lot to do with that, I do believe. But I'm still of the opinion that this will go down at some stage. I'll just need to find a reason to actually trade that. We'll attempt to keep our eyes posted on Euro versus the Aussie. We were in Kiwi versus the CAD, and I closed that before the close of the week. And we traded this bar here last week, got a nice entry, got a nice TP1, hit the support level, and I closed pretty much where the bottom of that bar, where the close of that candle was. Still committed to the direction. I think there's still room for downside on Kiwi CAD. Much will depend on what's happening in the Middle East, of course, and the price of oil, which we will come back to very, very shortly. Why? Well, because the Canadian dollar responds a lot to what the oil price is doing. And this time will be no different. Oil prices coming off, the surprise of some people, of course. So we're out of that one with a nice profit. The other one that we closed just before the end of the week was the S&P 500. We traded this on the weekly chart, did we not? Or was it the daily chart? Daily chart as a break and retest of the monthly pivot, not this time, but this time. So we traded this bar here, put our stop loss above, and I closed pretty much on the close of that bar on the weekend. Nice profit on that one, so that made up for the Euro Aussie with a little bit of profit for the week. Righto, let's get on to gold, shall we? And for those of you new to the show, again, welcome to you, and feel free to put anything in the chat box you want. We try to trade gold as a breakout with the Open of London, breakout of the Asia session. The problem with that is we've already had a breakout of the Asia session today. This is on the hourly chart. So gold has come off its highs and just continued since Friday, down, 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 down. Whole lot of volatility, as you would expect when we've got a conflict that's going on in the Middle East that escalates one day, calms down the next, escalates one day, calms down the next. That's pretty much what we're seeing in pretty much the charts, but certainly in gold, where we go down, up, down, up, down, up, down. Good luck with trading that, but I think short time frames are definitely the way to go with this, because it is acting quite technically, and you can see that by hitting a support level, bouncing, hitting a support level, bouncing, hitting a support level, bouncing, going through a support level. We need a retest. We got one. Retest of DS1, broke through, retest. If you were brave enough and in the market at the time to trade that little bar, happy days. You had a lovely result out of that on mid-Asia session or towards the end of Asia session today. So do we trade it today? Well, here's the range that we're faced with. There's the open of the Asia session right there. So that's the high of the day. The low of the day is right there on the bar that's just closed. So we've got about $36 of movement in gold today. Do we want to trade a breakout further than that? Not in my world. No, I certainly don't. And I certainly don't want to trade it to the high side either. So that range, I believe, will be pretty constant for the rest of the day, unless something goes bang in the Middle East. And, well, we've heard that that's quite on the cards. Or is it? Is it off? Is it on? Is it off? Is it on? Good question. I'm way, way too low in the pecking order to answer that one. So there's no gold breakout today, no trade on the gold breakout today. I think we'll probably find that that will range for the rest of the day. Let us see. As far as my analysis is concerned for the week, I'll give you the trade that I've placed on the weekly chart. It probably could have been pound versus the Canadian dollar short, because the pound is quite weak at the moment, and I isolated that as the weakest currency. The reason I've gone for euro versus the CAD is because it's actually a setup in my world. And my world sees a big double top here. It also sees a range that's very, very clear. That double top has been followed by a lower low and a lower high. I'm expecting price will continue to fall underneath the pivots and take us into profit around about this level. If this does actually reverse, the reward could be quite substantial. Yes, I see that inverted head and shoulders there, and that's why I'm taking profit well before the low of the right shoulder. But if it goes through there, look out. This thing could go anywhere. And conflict dependent, I suppose, and oil price dependent, this could very well be one to follow for quite some time. As I said, pound CAD could have been the option that I took. And the reason I didn't is because we've already got that big bearish engulfing, well, it is a bearish engulfing bar, I suppose, but it's gone. It needs to have a pullback here. That's the weekly chart we're looking at. If you look at the daily, you can see how significant that candle was on Friday. And to jump in here is just not the way I operate. I'd love to see a pullback here, however, and I would certainly change my mind on that, because I think pound CAD is a definite sell for the week, but only if you get a, well, only for me if I get a pullback. As far as the rest of the situation is concerned, or the rest of the currencies are concerned, I've got a whole bunch of game changer bars. Those of you new to the show probably have no idea what I'm talking about with a game changer bar. It is simply a candle bar, whatever you want to call it, whose low, in this case, sorry, that's the daily. We need to be on the weekly. Whose low is lower than the previous week and closed on or near its high. So that's the definition of the candle that I'm looking for. But what I'm also looking for is an agreement with the major, not necessarily trend, but the major chart pattern, if you like. The major chart pattern here in my world continues to be lower lows and lower highs, and this may well be no different to that. So we're in a protracted and defined and consistent, persistent downtrend. Yes, we've had 3 weeks now of buying on euro versus the Swissy. That could well be short covers. It may not. It may be a reversal. If it's a reversal, I'd like to see a pullback, and something like that sitting over here would suit that case for me. In the meantime, I find that very, very difficult to buy, even though the candle's fantastic, absolute fantastic candle to trade. Your entry would need to be there, your stop loss would need to be there, and you can see the potential reward available for that risk is very, very poor until you reach this first resistance level. So that's one reason I wouldn't trade euro versus the Swissy, but there are more than one. But that is definitely a game changer bar on the weekly. Same could be said for euro versus the pound. I'm actually in favour of this one, but the candle's just a bit too tough to trade. Again, I'd love to see a pullback. I think euro versus the pound has probably got some credibility this week. Yes, it's formed a very, very strong base, and now potentially that is a higher low. Well, it probably will be a higher low. I can't see this being erased or overtaken anytime soon. but I'd love to see a pullback, maybe to where the breakout was. If I were to see that, then I think the euro pound is going to be a buy all week long. Let's see if we can find a way into that. Pound versus the Aussie. Well, I've just said that the pound is very, very weak and probably the weakest currency on the board at the moment. You can see there are so many tails on here. It's ridiculous. This level has been rejected so many times. It's unbelievable. If you go to the bigger time frame, the monthly chart, you can see it's also at a trend line resistance, which is substantial on the monthly chart. And it's failed many, many times to get through that. For that reason, I'd have to be bearish pound versus the Aussie. The Aussie, however, has got its own issues and probably not the strongest currency on the board, but this one is, and that's why I think pound CAD is a far better transaction than would pound versus the Aussie be. Issue with this is that it is at the bottom of the range, and like many others, I would much prefer to see a pullback. Maybe a false break of resistance would be the best course of action here for me. That resistance level there, maybe that resistance level there would work for me. So if price were to find its way back here, and I actually doubt that that's even going to happen, but if it did, that's where I'd be looking for an entry up around that vicinity. You've got three pivots here that are suggesting that price won't go beyond them, and all of this toppy price action suggests the same. So a lower high, maybe smaller time frames. If you can find a way into this short, I think that would be the best course of action. Maybe in this vicinity would be ideal. Double top, lower high scenario in there would be good. That's pound versus the Aussies. Only a couple more. Pound versus the Kiwi, much the same trade in many respects. And you can see that big reversal bar there last week. Pardon me. Problem for me is that it's preceded by a reversal bar in the opposite direction. And that means that the market's got no idea what's going on here. And I don't blame the market for that, because we do have an issue in the Middle East that is unfolding. One day it's on, one day it's off, as I said, and it's very, very difficult to see where we're going next. That support level also makes it very, very difficult to trade short at this level. Same applies if I were to have a false break of this resistance area. That would fill me full of energy and probably courage to take this short, and that would be the way I'd want to go. Kiwi's been very weak, however, and again, I go back to pound CAD would be a far better conveyance than would pound versus the Kiwi. The last one is the dollar versus the CAD. Now, the dollar is as strong a currency as is on the board. I can probably just give you a brief idea of that with the currency indexes. You can see it's paused here after breaking through this major trend line, retested it, then got that beautiful run up, got through this resistance area, I believe, and then paused last week. I think this is ready to go again, and anything that you're trading against the US dollar, I think, has got a problem. Anything? Yeah, anything. I think the dollar is probably the strongest currency, and maybe even the strongest asset on the board at the moment. The other one I wanted to point out, and the one that's in question with many of the trades that I choose to take this week, is the CAD. Now, the CAD, we preempted this last week as saying we'd like to see it test the bottom of this range. It has done that, and it's pulled back off it. Is it substantial enough to warrant me going long here? Well, no, not of its own, but I do see that there is support there for the Canadian dollar, and perhaps that is what I'm taking into the week. We're at a support level on the CAD. We are, interestingly, on the euro, who is outpacing the CAD and just about everything else on the board at the moment, is giving a little bit of cheek. Not surprisingly, I suppose, because we are at this support level, or former support level. I think we have closed below that, however, and this really acts as a retest for me. And I think the euro is in trouble, having broken the major trend line, retested it, and now last week had a shocker, as did most things. I won't even speak about the yen. It's just ridiculous. You've got to rely on the Bank of Japan doing something that they promised to do, and yet they don't deliver. It's just a silly thing as far as I'm concerned. But the pound and here's the reason that I think the pound is the weakest on the board right now. This is extremely strong. We pointed out this false break of this trend line a couple of weeks ago. Absolutely picture perfect. Retested the break and then went on with the job. So last week we ended up with that bar. On the daily, I would suggest we'll may get a little bit of a bounce off this level. You can see it's been support and resistance. So I'd be looking for a lower high on anything that's got pound in it this week and trading that as a short. That's pretty much where I'm at. Euro CAD. I've chosen Euro CAD Ash over pound CAD short. Am I mad?
Well, do you know what? Interesting, mate. When you started talking about the pound CAD, I thought, geez, we've got to stop agreeing like this. That's the one I was looking at the start of the week, the pound CAD.
Okay. Yep.
Euro CAD, it's a little bit trickier in some regard, and I don't really know when it sort of comes down to why the pound is behaving like it is. I suspect it's probably because Governor Bailey said that inflation is behaving as he expected. And they have talked about some, potential rate cuts. But, we've still got inflation, which is over 3%. And we've got house prices that are reported today still in growth. They were weaker than the last month's growth, but they're still sort of like going up 1%. So there's still inflation, which is bubbling around. The unemployment data was it took quite a jump from 3.9% to 4.2%. And that might be something which is kind of like bedding in to the market psychology, along with Bailey's comments. But I'm with you, pound CAD for me is the sell. The issue, as you quite rightly pointed out, is the price, because we just don't have one. So, if I kind of show you what I'm looking at, then it's exactly the same thing in regards to what I want to trade. EuroCAD's a little bit trickier, but I'll show you one thing with the euro, which I do find quite interesting right now. But it's probably not EuroCAD purely because the potential for growth to be out there. And maybe come back, as you rightly said. The situation in the Middle East is on and then it's off, and then it's on and it's off. The euro may well kind of do okay just because it is associated with growth because of particularly Chinese growth, and we've seen a bounce back in China today. So this is the situation with the CAD, and you're right. The problem is the price is it's just really unattractive here. We've already seen this bar, and not only was it an engulfing bar, but we're below the engulfing bar price and this area here and the trend line. So until this thing starts to come back, and I'm really looking at near this weekly pivot. I think we could drop this down just a little bit. I'm looking around this weekly pivot before I'm anywhere near interested in shorting this. This line might well be there actually. So if we do that and tighten it up, it does lead us to the weekly pivot kind of area. So that would give us, and that's a really clean line. We got really, really nice clean touches, three clean touches. Looks something of a M topping pattern or some sort of reversal pattern here. So a pullback here, definitely on, for some downside. And that's what's kind of keeping me away from, trading anything with the pound short, because I like the pound short as well. But I'm thinking, well, if I need a pullback and it's, 100 pip pullback against the CAD, suggests that either the CAD is going to suggest something weak or the pound is going to suggest something strong. And if the pound suggests something with a bit of strength to give us a boost, that's going to turn around against all currencies probably. So I'm not really sort of interested in the pound purely because of timing, but I want it. This is the one that is kind of like the front and center for me is pound CAD short. I look at the euro.
We will have to stop comparing notes.
Yeah. Well, it's amazing, mate, because you've done yours purely off the technicals and mine's off the chart. I made that choice before I opened up the chart, and when I brought up the chart, this is COT data and everything. So the what's going on with the COT data, interestingly, is the CAD is a huge sell, but it's at an extreme. And when things are at an extreme, everybody's on one side of the boat, and that to me is a buy. So we've
That
pushed
range
down.
that I showed you depicts that fairly well, doesn't it?
Yeah, absolutely, mate. It's really sort of it's extreme. It's in the extreme selling level when you look at the net positions on the COT report, and extreme selling levels are a buy in my opinion. You've got to have a long bias in that kind of scenario,
Mm.
because you could get run over because you're sort of like still thinking we're going in this one direction, and then all of a sudden it turns around. Interestingly, the dollar I also agree with you on, because off the chart the dollar is very very strong, but the price point is just become so unattractive that it's not interesting anymore. The dollar's sold off, significantly, and I think it's best depicted really with, or certainly as well as any depiction with a Kiwi dollar, because when we look at the Kiwi dollar, if I can find where you are, there you are. If I look at the
I'm
Kiwi
glad you didn't
dollar,
say pound dollar because I'm still spewing over that. My
oh
trading
no,
stock
no,
got hit. My
the
trading
Kiwi
stock
dollar.
got hit.
Look at that, mate. I mean, it's just this is a weekly chart, and this is what I mean about the dollar. The dollar may well be the strongest when you look at the fundamental cotton seasonal in totality, but price action is not attractive here. To
No.
be selling the dollar, sorry, buying the dollar. Much more attractive to buy the other currencies, and that suggests to me that what we might need to do is float around down here, and see if we can get some kind of stability. And if we can get some stability, if we float around, so it's sort of like just create some sort of bottom in this area, then we wait for the off-chain data, if you like, or off-chart data, I should say, to change, and then we can start kind of like setting the dollar off. But it's not yet. But it's but because it's not yet, okay, you could take some intraday trades, but I just wouldn't be interested because the price point isn't there. Where there is a very, very interesting price point is the euro yen, because the euro yen actually it's already started to come off a little bit. The euro yen is at these highs here, and that is, that's very attractive. Seeing the euro yen to me
Except it's got yen in it.
That's the problem. Yeah, that's the big problem. So it's got yen in it, and it doesn't make it sort of like quite as attractive. But you can see that it's broken through this trend line now, and a potential kind of move back again. That would suggest that actually we have what could be something of a relatively good intraday move. When you sort of like think about the possible measurement down here, if that does continue to break, that looks like it's going to see these pivots, and if it's going to see these pivots, then even now, I mean, that's going to be it's not quite a 2-to-1 now, but that looks pretty good to me. That was a 3-to-1 trade if you manage to kind of get in the break, or we wait for a pullback and see if the break happens. But the price point is great because of the longer term move here. We're at definite resistance. The yen, as you quite rightly say, is a basket case, and I got run over, I think, twice with a euro yen last week, trading it short, and it didn't turn around, but managed to get the. I got this one though. I got this one. I got the Aussie yen short, and when it worked out beautifully. The only thing is, I got out of the monthly pivot on a take profit, and it went probably double. But the yen looks okay. It's one of those ones that when you look at sort of the Aussie yen is difficult now, because really we were looking at the hold of this trend line, and then on Friday, the end of Friday, I managed to get in on Wednesday or wherever it was, and I got that move. But then we've seen this break back through again, and it looks like if that holds, that we're going to probably go higher. At this stage, it's just not attractive anymore. So the yen is as you quite rightly say, so it's a bit of a basket case. It costs to hold overnight, which is also very frustrating. So you've got to feel like you're going to get your timing absolutely on the money if you're going to trade this thing, and that's tough.
And
but,
bank something quickly.
Yeah. I mean,
the
it
only
does make
problem with that, of course, is that once this does start going, it won't
Oh
come
yeah.
back for a while.
No,
It'll
no,
just
no,
keep
no. No, COT data is the same with the yen as it is with the CAD, where it's at an extreme. So when this thing flips, it's going to flip hard. It does suggest that the pound yen is also an attractive proposition, but as I say, I really want to pull back with a pound, so that's of no use. I had a quick look at oil this morning, and I'm seeing oil come off. You know, as we are kind of emerging from the wall of worry, but oil just looks to me like a potential buy when it comes back and you know hits this trend line. So back to around about the 79 area, 78, 79 area. This is going to be a buy, and you've got a or you know, for me anyway, you've got a lovely horizontal level along here as well. So you get some confluence, depending on how long it takes. You get some confluence in this area. That is going to be an attractive proposition to look for buy signals on oil, because this might be pulling back, but and it might be because of global contraction, but we know that there is concern out there, and you saw the spike with the yen off the attack from
which missile launch was that? Was the one that started the thing, or the one that replied to the thing, or the one that replied to that reply?
Well, do you know what? This is the interesting one, right? Because this was from Israel to Iran, and it was an interesting scenario because the markets obviously sold off, and they sold off hard. You know, after the most recent
Yes.
attack, but they missed everything. You know, so Iran came out and said, "Well, you haven't really done anything, so all good." And what I find interesting about it is Netanyahu effectively said, "I will do what I want" to the West. He said, "I will do what I want," but I wonder whether he purposely missed, but had to sort of express something. So he's expressed something to his people, but purposely missing, so he doesn't exacerbate and make the situation worse, because he's then effectively sort of, you know, appeasing the West. He's not pushing Iran into further retaliation. So that means that they don't have to do anything, but he still managed to kind of like say, look, we are going to sort of like use an element of force here. So it seems to me like there may possibly have been some method in the I suppose failed attack on Iran. And
concept.
Yeah, and you know what was interesting about it as well is that, of course, you know, you got this massive sell-off when there was a report that there was an Israel attack, but then just the most amazing bounce back when effectively the attack was not of any significance. So, you know, I think that there's a case to be made to say that may well be not over, but it might be behind us for a while if you know, if that particular theory is correct, you know, because if it's not correct, then Israel are going to go, well, we missed the first time, so we've got to go again. But if it is correct, it's like, you know, okay, well, we can all leave it to bed right now. You attacked us, we've attacked you, but we haven't done any damage, so you don't need to attack us again. But we've exerted some strength, so you know, it might be done for now.
That, of course, makes it very difficult because we've got no idea what the truth is, or
no,
what the timing's going to be. So
no, absolutely right, mate. And you know, the markets are actually quite difficult at the minute because, as I say, with the pound, we do see sort of like, you know, that one speech, I guess, from Governor Bailey, suggesting that the inflation situation is going in the right direction. Possibly that's what's pushed the pound sort of lower. But when you look around the data, each nation or each region is expressing something which is suggesting that the inflation narrative is about to take another leg lower. You know, we've got sticky inflation. Really, we've gone through a bit of a sticky period. But as long as oil continues to pull back, and as long as there's no ramp up of the situation in Russia and Ukraine and in the Middle East, it suggests that the inflation is going to take a step lower. And the reason for that is if you look at unemployment data from Canada, it took a huge jump, a big jump to the upside, you know. So that is deflationary.
Aussie did too, not so big, but it did also.
Yes, they did. They've come off a little bit. So the labour markets are starting to get stung. Now, the labor market is something that really we've been waiting for quite some time in the US specifically to give us some relief on the inflation narrative, and that hasn't happened. But we are starting to see it across the board everywhere else. So, as you say, Australia, Canada took a big jump. United Kingdom took a big jump, and CPI data has sort of remained, a little bit elevated, but it's easing down, and I think a more, another leg lower is likely. So PMIs are a little bit weak across the board as well, in a lot of areas. So I think inflation is probably cutting back. Now, where that becomes a challenge is who goes first, and that's what everybody's trying to do now. They're trying to get in front. Who's gonna cut first, because that's where the money's going to be made. Now, if the narrative is pretty much uniform across the board, how do you make a choice of which currency is going to be the first central bank to change their position? And the answer to that is you wait for the next meeting. Whose next meeting is first? And you sort of you look at that and say, okay, well, the next meeting is from the pounds, from the UK, so let's sell that one off. And I think that's probably at this stage the easiest way you can play who's going to be cutting first. Not to say that the next meeting is going to be the one. Incidentally, I mean, we've got the ECB suggesting that June is going to be their first rate cut, but then we saw this situation in the Middle East change that narrative. Now the situation calms down, that might be back on the table. 2.4% in Europe for inflation, which is, I think, I think is quite digestible for the ECB to say that's probably good enough for us to go in June. I mean, we've still got another month before that. For us to go in June, particularly if other data is still suggesting a squeeze to the economy. So I think the ECB might actually be the one to go first. That'd be my personal take on it.
I'm going to say you're far more confident than I am. I'm still of the opinion that oil can rally and may well back. A lot of this, not everything, but a lot of this just goes back to what's happening in the Middle East at the moment. And if the more countries that come on board, and one begets another at the end of the day, Iran's inclusion is particularly worrying in terms of oil, number one, but many other reasons, because their allies will come aboard and say, okay, you can't.
Oh, totally agree. Do you know, I'm not by any stretch confident. It's just ifs for me. If what is happening today continues, that's really sort of as far ahead as I can look. I can't really look any further than that, because, as you say, things could just blow up at any point. Metaphorically speaking, with tensions. So I don't have any confidence going forward necessarily. But today's situation is certainly one of calm, or so I can't say certainly one of calm, but it's calmer. And if the Israeli kind of reaction was actually just a shot over the bows, and if things kind of done, then we kind of can move forward and probably sort of start looking at things that are a little bit more in growth, and we can focus on inflation coming down because we don't get the oil situation. But that's just today. And the problem with this stuff is that it's literally, and you see it with this chart. When anything happens, it's bam. Sort of the market goes, and then either it calms down again and we get back to some sort of I guess equilibrium, or it's going to be the situation that really will be the thing that just opens up the floodgates, and it just goes and goes and goes and goes. But what's interesting is that the yen particularly is only really getting any kind of confidence when there is an event. It's not getting confidence from monetary policy.
No, indeed.
Which makes it, again, it's a difficult currency to trade right now. But still on that, it's still a very attractive currency against the euro because of price. It's great up here. So I will probably try and take an intraday trade on this one if it comes back a little bit. I was looking at it here, but it's it didn't quite kind of meet my requirements. But if it comes back here, only because we were at a structural, this is a 15-minute chart. This structure here was our horizontal level, and I thought, well, it could go up again. But now it's come off that, then I'm going to wait for 164.90, try and sell it off with a stop up there, and see if we can get down to the daily pivot. So I'm gonna trade this one. It's the one that I'm now going to look at. But overall, with you 100% on the pound CAD, but this needs to come back here, and at this stage, it doesn't look likely.
Yeah, if only they'd give us a price, that'd be all right. And
Yeah,
that's where that's why we're baying. We're going not there, not there. But
yeah, not here. No. I'd be all over this one, but so this is a daily trade. This is a daily trend line. And we're already at this horizontal. Oh, no, we're not quite there, but we're getting close to this horizontal level down here. So there's not a lot of room there. 28 pips, it looks like. Not a lot of room there to kind of like take any kind of bite, and that is going to be very difficult with stops and everything else. So even on risk to reward alone, it's got to come back. It doesn't matter sort of how confident we feel this is coming down. There's no risk to reward there at all. So, obviously, if it goes down here, there would have been, but that's not regular. That's not a regular kind of move. It happens back here, but it's irregular. So, if we're looking for some sort of regularity, it tends to pull back, and that's really what I'm waiting for, like you.
Yep. And so, I guess the summary is from both of us: weak pound, but got to have a pullback. Speculative yen. Bullish?
Not really. Euro
let's
yen
bullish.
is, yeah. Well, not. It's not so much that. It's more the fact that the euro yen's a nice price.
Right, okay.
The price is changing because but it down up here. I think it's a really attractive zone. I just like the level, and because I don't think the narrative has really changed when it comes down to the euro. The numbers that we had last week were in line with expectation, and the ECB have expressed some desire to look at cutting interest rates. So when I sort of take those things into account, I think, well, you're at a significant level. Why would you rally beyond that point here? I think much more likely that we get some sort of pullback. So I just like the price with the euro yen, but the fundamentals, if the COT data for the yen is really extreme selling. So that to me is bullish. COT data with the euro is, in the middle. So that's sort of like neither here nor there. So the COT data would suggest to me this has definitely got a chance of working out.
Okay.
Seasonal data, it's not all that attractive.
That's the strongest indicator you've got fundamentally
today.
There's really
Yeah,
nothing happening, right?
yeah, because everything else is so kind of in alignment. I look for extremes in the data, sort of like in other areas as well. And all I really can come up with is unemployment data jumping in the UK and Canada. But everybody else is sort of in lockstep when it comes down to sort of weakness in their economy in little pockets. So there's nobody's really stood out when it comes down to sort of like, apart from of course, the United States. And I suppose by neighboring definition, you sort of like then favor the CAD as well, and favor the CAD for price. So aside from those two nations, everything else is struggling. Economically, nothing is sort of like a beacon of hope, really. So the COT data and the seasonal data is where I fall back on. Seasonal data is again all over the place, really. There's nothing really I've got that I would put a huge amount of weight on. I mean, I can tell you that the seasonal data for Australia coming up for the next 4 weeks is atrocious. It's very weak. It's a little bit, it's a bit tepid as well from Europe, and the Kiwi is another one. Is atrocious. Dollar in the next month is pretty strong, and that's as far as we get. When you look at the CAD, it's okay. You look at the pound, it's okay. So nothing is really strong kind of going into the next month.
Yeah.
Even the dollar is good, but it's not its best period. Incidentally, there's a rally that tends to come in oil on the 27th of April. So that might be of interest as well.
That could well be of interest given where it's headed at the moment.
Yeah,
Speaking of oil,
yeah.
indices, any interest in those?
Only
Gold,
because of price. Well, do you know what, mate?
Dow
Actually,
Jones.
yeah, the indexes. So look at the FTSEs to start with. A weak pound would suggest strong FTSE, and that's exactly what's happening. But you wouldn't trade that.
Oh,
So
it's up there now too.
it's up there now. But what you would be looking at is the Nasdaq and the S&P, because these are, fundamentally, well, not fundamentally, but structurally, indexes go up all the time. So you're looking for buy signals.
Yeah, I got
Now,
out. I got out of the S&P.
on the short.
Yeah, I'm out of the short. Yeah.
Yeah, that's great, mate. I mean, this is definitely an area that it could be supported at. Tesla's not helping. Tesla's some got some pretty poor numbers and pretty poor narrative coming out from them as well. They've got these kind of robo taxis that are being released to the market, which has made no dent whatsoever. So Tesla's not really helping, and a massive bar last week, a massive sell bar. So that's not really the kind of situation that you would really want to kind of like buy up into, because really these sell bars, they can create some sort of reversal. There's a rally and then it comes down again. So this would suggest that it's probably a bit early to be buying the Nasdaq. And we all know the sell in May, walk away, scenario as well, which it's usually a bit later than May, but we are kind of closing in on that
Yeah,
period.
we're getting there.
Yeah. So would you want to buy the Nasdaq? Probably not. But I tell you what, this is good, because at least the Nasdaq coming down for the next couple of months gives us a much more attractive price point to try and get in, because really we want to buy the Nasdaq for sure, but I don't think it's yet. And also, you could really sort of like say the same thing when you're looking at gold. Gold is obviously a buy because of what's going on in the globe, but the price isn't a buy. So this also needs to come back to this point as well. And I suppose one thing you could sort of grasp onto is strong dollar, and gold has shrugged off the strong dollar to this point. Maybe it's time for gold to also ease back. So if there's an easing intentions, then I think we might see both oil and gold come off a little bit. So there could be a selling opportunity if your stomach takes it. So I'd be short on gold for right now as well.
Yeah, tough to be buying right now on gold, that's for sure.
Yeah, price is rubbish.
Meant to tell you, I missed lot. I had a
Oh,
target to sell lot at 46. Guess what happened?
it went to
Hit
46 in
46
reverse.
and went to 38 and a half. Absolutely.
Oh,
Oh, I was absolutely shattered.
but you're still in, right?
I'm still in, yeah, of course. No problem. But I could have picked up quite a few free shares
Yeah,
had I sold some at 46, which was my
yeah.
absolute turning point. And guess when it happened, Dash?
Was it on the weekend? Was it
Time by degrees.
really
Yeah, of course.
interesting? Interesting. I see a lot now at 41 cents.
Yeah, it's bounced back off its low. I mean, which is great, but having missed the sell really annoyed me.
Oh, do you know, mate? It's at 46. I see it. I see it. Yeah, you would have picked up some nice ones there. It's a tough one now with the uranium space. Do you know what? I don't know if you've seen Paladin. Paladin did a 1 to 10
Yeah, I
share
have.
cut, and their prices absolutely tanked. Um, but it's a tricky one with uranium, because the uranium story is still very, very positive, but we are seeing just some consolidation in the current area. I had a look at the uranium seasonal patterns as well, and I managed to get kind of the Sprott seasonals, and it tends to rally in about October. So we could be sort of like in a phase of just consolidation for a little while potentially.
Probably if we're talking about it, I probably should show that. Have you got this charts?
I do. I do. If
I don't
anybody's
know if
interested
anybody's
in,
been following us on uranium at all, but
here we go. Here's lots.
that's the one that I'm most heavily invested in. And if
Yeah,
you
you
go,
like this one.
if you show me the weekly chart or monthly chart, even, you can see why 46 was such a good level to sell at.
Oh, I see it. Yeah, yeah,
Yeah, it was so clear.
yeah. I mean, I've got my trend
And
line
that's
on
what I
it, and
love
look
about
at
these things. They react so technically. It's amazing.
well, look at it as well, mate, because I drew this trend line in months ago, and look where it came and tested and reversed to. So
Yep.
it went up there, it's come back, tested that area, and it's now looking pretty attractive, isn't it? I mean, we got another week before this month closes. This is going to be a fascinating looking bar. If this ends up closing at the highs, that's going to suggest a rally's on and ready to go. Now, what's also interesting here, if you look down at the daily, so is this time by degrees from your own analysis or from
No,
coaching?
this is Phil's.
Okay, so he's giving it to you, is he? Okay.
Yeah, I
Okay,
haven't
have a
got
look.
time for that. Goodness me.
No,
You've
no.
seen his charts, man.
Yeah, I know, I know.
Although he has simplified them amazingly. It's much better than it used to be.
Oh, cool. Yeah, look at these, mate. Look at these. Like this rally here is a nice example. Now, there's not like a load of volume here, but you can see that there's a volume, and then a big spike in volume. But look what happens when it comes back. Volume's just declining, and then you get
Mm-hmm.
this reversal bar on big volume, and it goes again. And then it's sort of like volume starts to kind of calm down. The pullback again is on very low volume here. Now it'd be interesting to see what happens by the end of today, whether we get another volume spike here. But a volume spike, this is classic, really, trend reaction with volume. The way the volume kind of comes back, and selling happens on low volume, and the buying happens on high volume. So it's looking brilliant. It's looking really good, no
Yeah, it's
question. And
really
anybody,
technical. I'm really happy with it.
yeah, and I'd say anybody that is not yet in the uranium space, this looks like a great setup, doesn't it?
Mm-hmm.
Looking really good. And as I say, this trend line is coming off a monthly situation here. It's a monthly trend line here, and we're right on top of it pretty much. And maybe we could tuck it in there a little bit, but we're right on top of it, and we've got this now we've got this hammer down here. So market closed now, isn't it? So yeah, now the market's closed, but definitely looking like another leg up on lot.
Yeah. Look, buy and hold. I find it very difficult to understand, even right now, that you could lose on it. But hey, that's just my opinion, and I have no experience in trading stocks. I can assure you, I'm a newbie. For the last couple of years, I've been trading this, but I don't have the qualifications to say that's right. But in my own mind, I can't see how this goes wrong.
Well, no, there's obviously sort of a couple of ways it could go wrong that are quite
Well, the
obvious,
world
and
could come to an end, of course, and that's
well, yeah, that's the third way. But I suppose that the other thing is that there could be another nuclear plant issue. So there's one thing that could hamper the price, and everybody gets sort of scared about uranium again. The second thing is just global contraction, and a significant global contraction, but that will be short-lived, for the space. But there are a few sort of bumps that could happen. But I know what you mean. The odds are stacked in the favor of uranium right now, because at this stage it appears to be the only answer to the world's global energy situation. And when you look at the energy which is going to be sucked up with AI, and all this thing, the global energy demand is just going to grow to a crazy level. And when you look at uranium, it's really the only answer to fixing the
yeah, and the supply
clean,
can't keep pace. The
and
supply
the supply can't
is
keep
way
pace.
under
No.
demand now, and the
Yeah.
demand is increasing. So
Yeah.
that
Yeah.
that's the reason the price will go up more than any other.
I suppose the big question for me, mate, when I look at the situation with uranium, if we look back at the extreme points in history that changed the uranium price, Fukushima is one of them.
Mm-hmm.
Then Fukushima was 2007, right?
2011, maybe.
2011, sorry, 2011. So yeah, just before Fukushima, the price of lot, as an example, was over 10 times higher than it is now. And the
Mhm.
question I think I would have is if the situation that we have now is even more bullish for uranium than pre-Fukushima, do we actually still get to and inflation and inflation adjusted as well from 2011? Do we get to this particular price point and potentially beyond on this particular stock because of the situation, or are we sort of prone to kind of come up, fill the
Not sure
gap,
who's
come down?
frozen. Perhaps it's me. It's generally this time of day where
Oh yeah.
I actually lose the internet because Elon
Uh,
Musk's bloody
can you
satellites.
guys let us know who's off? I've got a feeling it's Jeff, but it
In which
might be
case,
me. Oh, you're back again.
nah, yeah, Elon's bloody satellites are in a dark spot again.
They're moving. But yeah, so that would be my question, mate. How do you feel about getting back to this particular point? Would that be where you would say actually that's the price, that's the aim? And when would it need to get there before you sort of think actually it's not going to get there anymore? Does this need to get there by 2026, by 2030? Or is it an open-ended story where you're happy to kind of like say, not to say that you'll trade it correctly, because obviously sort of emotional come in, but when you look at it today, do you think actually that's really achievable in the next potential bull run?
I actually, sorry, next bull run, not
Yes.
necessarily, not
Okay.
necessarily. But I think we'll probably get halfway there in
Yeah.
this run.
Yeah.
I'm pretty confident about that.
Okay.
Why? Because, as I said before, demand is outstripping supply by multiples. You
Yeah.
know, does that? The only question in my mind is, does that deter then people from creating more reactors? And we've got a situation here in Australia where the the incumbent government is saying no reactors, will rely on renewables like wind,
Yeah.
solar, which at this point in time is proven not to be able to supply base load for a country or a state, much less a country.
Yeah.
So, as you know, you've done the research now. Uranium has the answers to that without question, and the nuclear reactors that are coming on board are very much an increase in demand. In Australia alone, if we have a change in government, there'll be nuclear reactors replacing coal-fired power stations, in theory, in a heartbeat.
Yeah.
Obviously, they can't build them in a heartbeat, or they can't transform them in a heartbeat from coal-powered to nuclear. But I see
Yeah.
that as being a trend. If that, and Australia is way behind.
Yeah.
Countries in Europe are already using uranium as their base load power.
But isn't it because it's illegal in Australia?
It is, yes, and
Which is
that's
a
the whole
shame.
point.
Yeah, which
Well,
is
it's
a shame.
crazy.
Well, it is
Well, it
crazy
was.
because I mean, just from a security point of view, it's crazy. The West and their security point of view, it's crazy because if they've still kind of like having to how to drag energy out of Russia, then they've still got this kind of reliance on a conflicting state. And I'm not saying Russia's a bad actor because it depends on which side of the border you are. But if you are a Western government, then you must be looking and thinking, well, we could do with a Western government producing this stuff for us and giving us the opportunity to buy from them. And yet in Australia, they don't allow that.
Well, no, they can sell it. They can sell
They
the
can,
uranium. Those can't
they
use
can,
it.
right, okay,
So
okay.
so it's actually a great export product. And
Mm,
my memory doesn't serve me well, but we've got a well, let me call it an SH1T ton of uranium here in Australia as
yeah,
a resource.
yeah,
Um, that bodes well, of course, for the Aussie dollar down the track as well.
yes,
But that's not the point that I think I'm making. My point is, if Australian government changes hands, then that embargo, if you like, or rule that we can't use uranium power in Australia changes overnight.
Yeah.
So there's a few more reactors that come online. There's a few more
Yeah.
demands.
Yeah.
And if Australia is actually smart, and they're not historically smart with their resources, because they've sold so much coal to China. I think China's got just as much coal in the ocean as Australia has underground, frankly. But
Right.
that's how dumb we are. We've
Yeah.
actually leased all our coal ports for 99 years to China.
Right.
Guess what that means for supply?
Yeah.
Hang on, there's 45 boats sitting off the Newcastle harbour waiting to be loaded for coal. Guess which ones are going to get loaded? They won't
Yeah.
be the Japanese or the Indians or the Americans.
Yeah. Yeah.
It'll
Yeah.
be the Chinese.
Yeah.
So as we know, China plays a very long game, and they're very, very cluey and very smart. But if Australia got wise and said, well, okay, yes, we do have nuclear power in Australia because it's sensible and it's smart, and we've got the resources, for goodness sake. Why don't we use them? We want. I doubt that we'll do that because we're not smart. We're supposed to be a smart country, but we're not. We just ridiculously undersell our resources. Anyway, end of sermon, I suppose, at the end of the day.
Yeah.
Did
Well,
I
I don't think we
see?
got
Did I see
George. No, I
George come in?
don't think
I
we've
don't
got
think I did.
George today. No, no. But if anybody's got anything else, any other comments or anything they want us to look at, or their, anything really, then shout for us, and we will look at stuff. But otherwise, we're probably ready to get out, aren't we, mate?
Yeah, I'm just having a look at the euro on the 30-minute chart, and my penchant at the moment is to get back into trading that. Unfortunately, time is still beating me at the moment, but I've got an untested daily and weekly pivot, which is really interesting for me. I'll just share that with you before I go
Yeah,
further.
let's do it.
So those of you not aware of how I like to trade this euro dollar, primarily it's okay, you need to have a bias, but on an intraday chart, the 30-minute chart in particular, it's pretty clear cut to me what I need to look for, because we've got numbers working for us. And by that, I mean there's a probability factor that the euro will test the daily pivot, something in the percentiles of 65 to 85%. And I've proven that many, many times before. Every time I do the research on that, it comes up with the same figures. So therefore, when I've got an untested daily pivot below me and it's absolutely stuck like glue to the weekly pivot, that's extremely attractive to me. Does that mean I just enter the market and take the profit? No. I need to find a setup for that. And it may just go there because of magnetism. But if I find a setup that agrees with that, and at the moment that setup looks like being a potential false break of this resistance area, which has been rejected 4 times in the last, 6 hours or something. If I were to see that, if price broke above that level and then failed one more time, came back underneath it, then I think a retest of that area provides me with that opportunity to go short and trade it down to the pivot. So if I'm actually awake, if and when that occurs, without the daily pivot being tested, I must add, it has to be an untested daily pivot. If I were to see that, then that would be my trade for the day, euro versus the dollar. Even if it got up to here somewhere, I'd still be looking for that reversal back to the pivots. So any setup at a resistance area that affords me to go short the euro versus the dollar until the daily pivot is tested, then that would be my absolute want. And it is every single day of my life when my rear end points to the ground. And so far it still does. Can't stand on my head anymore.
Yeah.
That's why I've got a flat top I used to.
It'll come back, mate.
Oh, yeah, I've got no doubt about that. And in fact, the further it gets away from those pivots, the better I like it.
Yeah. Yeah. Well, I'm going to look at the euro yen, but we'll see. See what happens with that one. I might be taking that trade pretty soon. But I've talked through that, and I it's a higher risk trade, but I just like the price. I'm going to give it a go.
Okay, those of you who've come in late, I've only got one trade for the week, and it is EuroCAD short. And really what I'm trading here is a bar that occurred 3 weeks ago, and it's this one here. The reason I like the short underneath that bar, certainly underneath the open of that bar, is twofold. One, the previous bar broke and closed below the monthly pivot, and that bar was a retest of that area with spades, of course. The thing about that is we haven't really closed above the high of that bar, well, not the high of the bar, the close of that bar since. So we've had inside, currently inside as well. And we have broken and retested the pivots now. So I'm all in favor of the downside on EuroCAD. Timing is everything, of course. I've got my entry underneath the open of that bar, and I'm going to take profit before the lows here, or close to the lows here. That's the trade. If you wanted to follow it, the entry is at 1.4595. My stop loss is above the swings at 1 point. Can I add 200 to that before 79? 4685. Is what I can't know. 47. That's more. My maths is not working. Let me give you the level. 4785. That's better. So stop loss 1.4785. First take profit just before those lows there will be at 1.4465. I think I got that one right. I can subtract better than I can add, apparently. So that's me at this stage of the week, one trade only. Like I said, I could have chosen pound CAD over euro CAD, and probably from a fundamental point of view, that is the way to go. But like Ash and I both said, the price is SH1T house on pound versus the CAD at the moment.
Yeah, right now.
And we're screaming for a fullback up. No, that's a football. I'm screaming for a pullback, not a fullback. Don't like full. Righto. Don't see any questions in the box, can you?
No, I don't see anything there, mate.
All right, that must mean we're done for the day. Thanks, guys, for joining us for the day. Some lovely new faces in the room, or some old faces that I haven't seen for a while. Not that you've got old faces, just that you haven't been here for a while. Simple as that. Enjoy your week, and Ash and I will be back next week at the very same time. Hopefully George will be in as well. Have a great week, mate.
Yeah, you too, buddy. You too. Keep our eye on that uranium stuff.
Always do.
We'll have 5 minutes on it again next week.
Sorry?
Let's have another 5 minutes on it again next week.
Okay, I'll prepare a little bit more on the Aussie miners.
Yeah, that'd be great. See if
Okay, cool.
see if Phil wants to give us some time by degree stuff again.
I'll ask him.
Cool. All right, buddy.
Have a great week, everyone. See you later. Bye.
See you soon. Bye, guys.
See you.